good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading Satellite Office down in sunny South Florida. Today's date is Tuesday, November the 20th, 2012, and here is today's After the Bell market summary. Want to first start off by taking a look to see how the indices closed today. The Dow Jones closed down 7.45 points. The Nasdaq closed up 0.61. S&P 500 closed up 0.92. The strongest index out of these three was the S&P 500, up 0.07%. Pretty much a flat day across the board. We opened up, the market opened up above yesterday's close on the futures. Well, actually, we kind of opened up right there at the flat line on yesterday's futures. However, we sold off in the morning a little bit. They bought it right back up, and they sold us off again coming around 12 o'clock, 12:15 when Ben Bernanke was on TV. Then they bought the market back up to flat line. Volume is obviously low as it is a holiday shortened week. And, there's some trades to be had, and there's just some stocks that are just trading sideways and nothing to do. If we take a look at the breadth today, we had 3,158 issues advancing. We had 3,018 issues declining on the NYSE, NASDAQ, and Amex. If you guys remember the breadth from yesterday, it was more like a 5-to-1 ratio in favor of the bulls due to the fact there was a nice little short squeeze yesterday. A lot of people were looking to cover some of those shorts and get long the market. Thanks again to that like I told you guys yesterday, the dollar decline, the little bit of strength, the euro strength that we had yesterday, and the bid in the commodities, which kind of reversed today. We didn't see that much bid in the commodities today. They kind of had a little slight down day today, and we're going to take a look at those charts here shortly. So let's go ahead and jump into the charts. Again, this video is brought to you by Wall Street Trading, wallstreettrading.com. If you have not been to our website yet, please go check it out with our featured service, My Wall Street TV, with our live trading room, baby. Let's go ahead and take a look at the charts now. Starting off with the SPY. SPY up 6 cents. All right, we're still watching this key area right here as we discussed yesterday. Talked about how this key area, this key trend line is going to be relevant for the fact that it was holding as support about a couple of weeks back, back here in mid-October. We broke that, say, going into the beginning of November. And now we're kind of rechecking this area, which also lines up with a resistance area from this prior support level. So this is kind of like a double resistance area, or even call it triple, for the fact that we have a declining 20-day simple moving average coming right there. So this 140 area is going to be very important. Above 140, we have 141 on the SPY. To the downside, we're going to be watching this 138 level, 137.90 area. Call it 138, whatever. 138, let's call it. All right, and we're holding above these 200-day simple moving averages, exponential moving averages on the daily chart here. Let's take a look at the triple Qs. See how the triple Qs closed out today as we go through these indices here. The triple Qs working off that 63 level of support. There's going to be some resistance around the 64 level, more resistance around the 64.50 level, and then more resistance around this key 65 level. We could get a pop up to 65 and then possibly fade. As you guys know, 65 is a very important level from back here, from this little range that we were trading in here back in June. We broke out that range, but now that top of that base, since we broke back below it, all right, is going to be acting as resistance. So we could have a little bit more upside action this little shortened week holiday float up that we're having right now. But then come Monday next week, they can knock it right back down. So we got a lot of got some key levels to watch right here on the Qs. Not going to be expecting much tomorrow. And I believe the markets are closed on, markets are closed on Thursday and Friday. Let me double check that for you guys. I should know this up by already, but all right. So markets are closed Thursday, and the markets looks to be closed early on Friday. They close at 1 p.m. All right. So that's how the Qs are looking. Let's take a look at the IWM, the Russell 2000. This one's a little bit interesting because this IWM is back inside this little key downward channel. So I would say the longer we could hold above this 78.50 level or so, we could start to maybe getting this thing to tick back to the top side, see if you get some action towards the top of this channel up here. And if we were to break above this top of the channel, then, well, if that was to happen, that means things will look good. Now, that's, can't get too ahead of ourselves right now, but got to watch to see if the IWM can get back over this key 79.50 area, the 80 level. If we can break back all of these moving averages, and then we have to battle this 81 area, which is going to be acting as resistance. That's how the IWM is looking. Remember, the levels to watch the downside is yesterday's lows around 78.21, and then this little gap fill that we have down here from Monday's gap around 77.50. Let's take a look at the dollar futures chart, dash DX. See what the dollar futures is doing today. Now, this is getting pretty interesting. Why? Because this is a nice little upward channel against the key resistance zone. We got rejected last Friday. All right, we're seeing that continued weakness from Friday's reversal, especially yesterday, a nice little down day, and today was dollar was weak a little bit here. Once this dollar breaks this little upward trend line, or its upward channel, I should say, if it does, we're going to be looking for a move back down towards 80.25. If we break back below 80.25, that means all this action right here was most likely a bull trap and an opportunity to short the dollar on this little bounce that it's getting right now. So a lot of interesting things happen. If this thing was to break down, we're going to be looking for a bid in the commodities. Talking about the commodities, let's go ahead and take a look at the GLD, all right, which right now had a nice little pause day. Nothing too crazy. It's still up from the gap up, still holding that gap. Not the closing price of the gap, but still holding most of that gap. I would say it probably filled about 50% of that gap today. So really want to see it hold today's lows on the GLD. That low is 166.84. Then I really want to see it break above this 168.50, 169 there. That's what I really want to see. And that could happen if that dollar chart goes lower. Let's take a look at the GDX. We talked about the GDX being in some of my proprietary channel analysis here via this little highly shaded area, this yellow highlight shaded area I have here. We broke down out this channel. We got the nice little selling pressure. And now we got this bounce off my key trend line right here as well. And now we're trying to bounce back up. Now, if we bounce back up, I would say a little bit more here, and we get rejected at this 48.50, 48.30 area, call it, and we put like some type of reversal candlestick in right here, I'm going to be looking for this to move lower. Why? That's going to be a back test of this prior support from this little slightly downward angle channel. Back test holds, and we look for a move lower. However, if we get back inside this little yellow channel here and we start holding above 48, 42, this is going to be a nice little shakeout, and we're going to be looking for those gold miners as a buying opportunity. Need some more clues, but got to get those scenarios ready so when it happens, you're reactive, and you're not, you're more proactive, I should say, and not reactive. In essence, you know what you're going to do when it triggers. You're ready to go. You're not looking back at your chart saying, okay, is this a key level? Why is this a key level? You already did your research. All right, and that's what we try to focus on here at wallstreettrading.com. And as you guys know me, Channel Guy Trader, and the work that I do. Okay, so GDX, let's take a look at SLV. I know a lot of you guys out there are trading silver now. Silver held up pretty well today. Like the gain in silver. Wasn't much, but it's still a nice little green day on the chart here. Once this thing gets back above, I would say 32.50 or so. Yeah, 32.50, we could get some nice traction. Hopefully, silver can start making a nice move up. Then people will start following gold. If you guys recall, silver was the catalyst not the catalyst, but silver was the first one to start moving up out of these precious metals when they started catching a bid back here in late July, early August. All right, let's not forget that. SLV, let's take a look at copper, HG. All right, copper has been weak, but you can see here it's trying to get back above this key little range right here, 355. If copper can move back up, we're going to be looking for copper to move back up towards $3.60 to recheck this little trend line right here that comes from this little key channel breakdown that caused a lot of weakness in the market. All right, and in a lot of these commodity stocks, obviously you guys know when the copper is strong, usually the market has a nice bid underneath it. When copper starts to get weak, it usually causes some concern in the market, as it is a good indicator for economic growth and different stuff like that, as you guys should know. All right, so that's how the copper is looking. These precious metals are looking. The commodities are looking. Let's take a look at one last commodity we'd like to look at. Obviously, is crude oil. Crude oil closed up 60 cents today at $87.35. I'm sorry, that's not correct. It did not close up 60 cents. Crude oil today opened up at 89.15 on this day right here, and it closed at a low of 86.17. We take a look at the 5-minute chart. We get to give you guys a better understanding of what's going on here, as I wasn't tracking crude much today. But you can see here at 9:30. All right, when the U.S. equity markets opened up, this thing was trading sideways, and it really started selling off here. I believe more news started coming out about the Gaza and Israel being in a ceasefire. So, I mean, obviously some of this bid that the crude oil market has caught was because of that overseas action, little war that they had going on over there, a little small missiles going back and forth. Not sure what you want to call it, but hopefully with the ceasefire, crude oil could go back down. We don't see this little crazy run up in crude oil, so we can continue to have these cheap gas prices at the pump, which has been helping me out a lot down here in South Florida since you have to drive to get to a lot of places over here. So crude oil, if this thing gets back below 88, starts holding below 88, we're going to be looking for this to fall back down towards 85, 84. All right, if you guys trade the USO, USO is above that key 32 level, and guess what? Now it's back below 32, closing today at 31.95. It did fill this gap up here, though, that it had from the gap up on Monday, and at the same time, it did close off the low. So we got to continue to watch this crude oil work via the USO. If you're trading crude oil with the USO, watching that key 32 level. Let's talk about some stocks here now, since we went through since we covered most of the nitty gritty stuff here. Let's talk about. Of course, you guys love to talk about Apple. Apple down $4.81 today. Like I discussed before, you really can't get bullish on Apple until Apple starts holding above this 570 level. Why? Because if you take a look back here at this 570 level support that was holding back here in July, all right, that level is holding pretty good. Hold on one second. I have my window open, and the ice cream man is passing by the neighborhood. All right, so taking a look at this chart, you can see how this 570 level was a key level. All right, so until we get back above 570 and start kind of forming maybe some higher base above that level, this opportunity in Apple, that the bounce could be a short opportunity. All right, and now I know you got a lot of Apple perma bulls out there, but guys, you got to get above this 570 level and hold maybe for some type of high base flag or something like that, and then get a move up and out. If we continue to get rejected at 570 and hold below 570, then that means this was an opportunity to actually short, and that people that got long down here are probably going to, be looking to get the level checked again. We'll see. Can't get too ahead of ourselves. As always, got to look for more clues and wait for the different scenarios that could take place, different scenarios that look like they could take place, to see which one actually happens. All right, let's take a look at Amazon. Amazon had a nice little bounce today, up $4.07. You guys remember, highlighted the fact that Amazon was in the key buy support area from this little buy zone that we had from the gap up back here in July. That held it pretty well, and Amazon's looking stronger, looking like the stock to go to. Maybe the next momentum stock to make a move back up towards those 52-week highs. All right, so keep an eye on Amazon. We do have a lot of stuff to take a look at here, so can't go over everything. I want to make sure I go over the key stuff here. ExxonMobil still holding that 200-day moving average right there. Needs to get back above 88. Let's take a look at CBSX. Little down day today. Really just trying to see where the money's going at. Obviously, from the short cover rally we had yesterday, and today's low volume market and tomorrow's low volume market to come, we're going to be looking for what stocks are holding up, what clues we can find out there, and go from there, guys. All right, hope you guys had a great day. Make sure you come check us out in the trading room. We pretty much call the market to the T, to the upside and downside today around our key levels and our key cool indicators that I have put together for the room to use together. All right, so that's about it. If you are trading at a firm and you're looking for better commission rates, if you are a manager of a trading group and you're looking for better commission rates for your group, contact me at ccooper@wallstreettrading.com. I can guarantee you better commission rates to make sure that you can run your business more efficiently. And also, we have the tools and resources that you need if you're looking to profit inside this market. Have a great day, guys, and I'll catch you guys bright and early tomorrow at 8:15 in the My Wall Street TV chat room. The link is currently working. For some people, it's not working for some people. So if you have trouble logging into the room, contact me via email at ccooper@wallstreettrading.com, and I have the alternate link that you can use. Have a great night, guys. Cheers.